Earnings season has made a solid start, but will it continue? Welcome to Market Insight. I'm Elena Casas. 83% of the S&P 500 companies that had reported results as of Friday beat estimates, and that drove Wall Street to a sixth consecutive week of gains. This week is packed with earnings reports, with Tesla, Boeing and IBM in the diary, among others. So can the tone stay this upbeat? Well, joining me to talk about that is Nathan Moser, Senior Portfolio Manager at Impax Asset Management. Nathan, hello. We've got some pretty stretched valuations around, especially in tech. Are we likely to see numbers that justify that?
Well, thank you for having me. I think it all depends on how strong the reports are. You're correct. The market has gone up for 6 weeks in a row, at least as measured by the S&P 500. So to the extent that earnings beat and guidance is positive, there's the potential that stocks could remain well bid. That said, if earnings disappoint, valuations offer very little support, especially when considering the largest mega caps or large caps in general.
Do you think the numbers we see will encourage the broadening away from tech to continue?
Well, that depends on how the smaller and mid-cap companies report. They are just getting started. We've had some early reporters with respect to the banks, but until we get into the broader sectors of the economy, it's to be seen. The trend over the last quarter has been for the market to start to broaden out. I think part of that has to do with the US economy being quite resilient. Part of it has to do with valuations being quite compelling. If you think about, take the NASDAQ index, for example, that index trades at nearly 30 times next year's earnings. And then the Russell 2000, which is a good measure of the small caps in the United States, that trades closer to 13 times earnings. So I think you're seeing investors rotate to where there's more value in the market.
Investors generally seem relaxed despite the fact that the US election is now just 2 weeks tomorrow. Historically, at this time, we've seen a lot of stock volatility, but they seem less concerned about the uncertainty at the moment. Why do you think that is?
Well, it's interesting. The polls remain very tight, 50-50. Some folks have called it a coin toss. But we've seen some differences or shifts in terms of the betting markets or in terms of the underlying industries that are performing in a direction that would suggest Trump has the potential to win this election. I think we may still get some volatility here in the next couple of weeks, but I think the message for most investors should be following the election. We should have certainty over what the next 4 years will look like, and that any volatility in the market should likely be purchased.
You mentioned in your notes a likely uptick in M&A on the back of the election following, as you said, that gain in certainty. Whereabouts are you expecting to see these deals being made?
Yeah, so the M&A activity has really taken a dive in terms of folks are sitting on the sidelines. When we've gone back and looked at data over the last 10 years, we're at activity levels not seen since really the peak of the COVID bottom. And so I think there is pent-up demand post the election. I think you'll see a surge in activity. Typically, areas around innovation tend to lead. So think technology, healthcare. Specifically within healthcare, we expect biotech to be a quite fertile hunting ground for larger cap pharmaceuticals. And then I expect to see some M&A activity also within financials broadly.
And for investors, where do you see opportunities at the moment?
Well, I think healthcare is probably the most attractive area within the marketplace. If you think about where innovation is creating shareholder value, that will continue regardless of the pace of the US economy or the global economy. And so to the extent that you can identify strong companies in that sector, that's where I think there's the most compelling opportunity.
Well, thanks so much for joining us, Nathan Moser of Impax Asset Management. And that's Market Insight. Don't forget, you can watch more videos on Reuters.com.